Did it do anything? Cool. Yep, there you are, Roger. Awesome. Yep, I just opened it. Okay, that's fine. Yeah, so what's going on is that I don't know if you have the same issue, but I lose VPN at 4:30 every single day. Every single day. Yep, gotta do it again. Yep. So I opened the meeting. Roger's on. Okay. Let's see. Hi, Paula. Hi, Paula.
Can you hear me, Paula? No? Hmm.
Hi, everybody.
Hello, can you hear me?
I can hear you. Can you hear me?
Yep.
Paula, hi. I can't hear you. Paula's muted. That's why I can't hear her. She's looking at us, but she's muted. She don't want us to hear us, to hear her. Paula, do you know you're muted?
Can you guys hear me?
Hi, Roger. We can hear you. You're still
Okay,
in
I
the
don't know
office.
what's going on. I have to connect through my phone, but I can see you guys. I don't know what's happening.
You can see. So it looks like the VPN may time out at a certain period of time because I got here at 7:30 this morning and mine timed out probably about 30 minutes before y'all's did. So I'm guessing every day it will just time out and you have to restart or log back. All I had to do was log back in.
So I haven't noticed that, but that's what happened. But I didn't have the ability.
That's the first time it's happened to me.
Hi,
Okay.
Rebecca.
Hi,
Hey
Rebecca.
guys, how are you?
Good, how are you?
I am bouncing all around. Literally, the camera came on and I saw the hair beneath my thing. I'm like, oh my goodness, hold on. They're
Oh,
gonna
I had to
think
put some
I'm
makeup earlier when I got there. It's like, I've got stuff on my eyelids.
like they're gonna I look as crazy as I feel. Normally at least it's not as bad.
Well, we appreciate your flexibility and still taking care of us today. I know you've had a heavy load today.
Oh my God, I am, yeah, thank you so much for your patience, because when I saw that, I nearly had a heart attack, and it was the end of a long day, and I was like, oh no, I don't want to have to tell them, but thank you. I really
We
appreciate it.
never want to be a point of contention or stress to you. So we appreciate you providing your expertise to all of us. We've got a big crowd today.
I bet so. It's a good conversation. I was rapidly updating my presentation this morning, making sure that we gave people the new application for that PPP second draw. So,
Now, did you see Paula sent back the presentation to you this afternoon with just one little update? Did you see that?
I didn't, but I'm glad you mentioned that.
Okay. And it was just changing our name from, so we're in the North Texas region, but our center is the North Central Texas called SVDC. That just a little thing. You know, we're just so proud and we're so particular about those things, about our branding, right?
No, that's good. It's supposed to be that way. Here it is.
Very good. All right.
Okay.
So Paula, we can't hear you.
That was the same issue I was having. Is I had to dial in through the phone because I can't get the microphone to work for some reason.
Well, I had actually muted myself, so
There she is, that lovely
yeah.
voice.
So yeah, I can't. Well, let me see if I can get it to load now. Nope. The PowerPoint is not loading from the share drive. So let me go over here.
So now, Rebecca, you're sharing your PowerPoint, right?
Correct.
Okay, all right.
You got it.
But you were looking for the hours, Paula?
Yes.
Yeah,
All right, well, I can find it and then I can share it. Let me see if I can get to it.
yeah, no, I don't have,
Are you logged into the VPN? I don't know if that makes any difference or not.
yeah, I am logged into the VPN, but for some reason it just did not want to load. I
All
should
right,
have
so tell
sent
me
it
what
to
that's on.
myself in email.
SBDC, I am presentation training. Person training. So the one PPP forgiveness update, 1/12/21. So I got the one that says it's updated about 12:09 today.
Yeah, that
let's
sounds
see.
good.
Well, that's her presentation. That's her
No, there's,
presentation.
okay,
the
there's
sl-
another one.
Slides for the forgiveness. All right, we're gonna get there.
Yeah, try.
Glad we all joined early, and thank you all for being patient with us. And we're gonna make sure we're all together. All right. Forgiveness. Perfect. I see it. So I will make sure that I go and say. All right, I'm going to do slideshow from beginning. Look at that. Okay. All right, we're there. Everybody's there. So I've got it up. So when we get closer to 5 o'clock, we got a little bit of time. Get a little closer, then I'll start sharing.
All
We
right,
have each
awesome.
other for right now. So we have, I believe, Judy, you said 44 that had registered and we sent links to.
Yes.
Okay, so we have still
Awesome.
a few. And so Rebecca, you said you were on a panel. Was this earlier today? Was it the same topic?
Not the same topic. I also do the lead faculty for the Goldman Sachs 10,000 Small Business Team, Houston. And so we just kicked off cohort 29. Woo! And that is a lot of work. So what I was doing earlier was trying to make sure that all my 35 scholars were able to access the platform. You can imagine it's like craziness. And it's not one piece of technology, it's 4, and they all interweave, right? So I'm like, it's a mess.
Oh, and you still have your sanity. I love it. I love it. She's still smiling and laughing. That's how Roger handles his stress too. He's always smiling and laughing. He's like, right out of this. Well, good. Well, Paula and I don't know if anybody else had joined into a webinar at 2 o'clock from SBA about PPP updates. It was a lot of information. It was a
Oh
lot
my
of information.
gosh.
So I thought, I told Mel, I told Paula, I told Judy, I said, you know what? Rebecca is going to bring this down a notch and she's going to make it palatable. You're going to be able to understand it now because it was just way over my head.
Yeah, I felt that way too.
Yeah.
I felt that way too, Lori. Whenever they came out and there was just a lot of verbiage and it felt redundant, but then you had to stop and say, well, this is the government. They never just, say things to say things. There's always something hidden in there. Like, do I have everything I need? So
And we're government, but we're the friendly government. We say we keep it straightforward, right, Roger? Right, Paula? So,
Yeah,
we're the government,
yeah,
but we're
we'll
the
go
easy.
with that. Yeah.
the one part of the government.
I used to work for a lady that would just say, break it down into Captain Kangaroo.
There you go. So that's what we're looking for, Rebecca. Captain Kangaroo.
Okay. I think I need to find a picture of him and then I can have him dance across the.
Yeah, that would be good.
Oh, wonderful. Looks like they're Okay, in a bit. Well, I'm going to go ahead and share the screen, but we'll still wait a few minutes before we get started. And then y'all make sure you alert me, make sure I'm sharing the right screen. Blue screen, everybody see that?
That's it.
Perfect, perfect. I see Michael. Hi, Michael.
Hi, Lori.
I just talked to you. All right. Everybody's jumping on.
We can see that too.
Okay, I pulled it over. You see it now? You can still only see the blue screen, right?
Correct. Only the blue.
All right. Looks like we're getting quite a few. All right, I know we'll probably have quite a few people join us as we get going, but we want to get started timely. And since we did push it a little bit, we still want to make sure we start on time. So Paula, if you want to get started, then it will also be recorded so we can share this with others if they miss any piece of it.
Sounds great. Good evening. Can we call it evening now, everyone? And welcome. Thank you all for joining us for today's webinar and for being so kind as to transition to the change in the time for today's webinar. We really do appreciate your flexibility. My name is Paula McCain, and I'm one of the Recovery Business Advisors at the North Central Texas Small Business Development Center. We hope you all had a wonderful Christmas and a Happy New Year. The SBC is the leading provider of assistance in starting and growing a business, saving a failing business, or access to capital. The SBDC is a grant-funded program which allows us to offer advising services, resources, and courses such as this to you at no cost. You can visit our website to view locations and for contact information for our center. Today, we're presenting the 10th in our COVID-19 funding presentation, an update on PPP, pretty hot topic right now. It's being presented by Rebecca Schultz. Just a little housekeeping though before we get started. If you have any questions, please type them into the chat box in your WebEx control panel, and we'll bring them up after the presentation during our question and answer time. Now, without further ado, it's time to introduce today's presenter, Rebecca Schultz. For the past 25 years, Rebecca has helped individuals and small business owners gain access to money and financial education they need to achieve real goals. She's the founder and executive loan consultant for Center Lot Funding. Thank you, Rebecca, for being with us today. We know that you have been just extremely busy the past few days.
I have. Thank you so much, guys, for inviting me back. I love this topic, and I know that it has not been an easy road for many, right? This is getting a little bit more complicated and crazy as it evolves, but I promise I'm going to do my best. And oh, hang on. Let me stop sharing. I'm trying to find my PowerPoint presentation in getting you up to speed on what we're dealing with right now. So hang on one moment, just trying to find it real quick. Seems like it. Oh, there it is. All right, ready? Let's get started. Full screen, and here we go. All right, so I come to you with 25 years of credit experience, right? And so this has been a topic I've been covering for the last 9+ months. But I love this little meme here, this little picture, because it's so true. I feel like as more guidance is coming out, the government is separating it into wonderful ideas, terrific plans, and then guess what? The devil's always in the details, right? And as we are all drinking from these fire hose of information that's coming at us so rapidly, we have to slow down and look at some of those details and see what we should be paying attention to. So in today's presentation, I'm trying to get to that details box. All right, so the big picture is that we know that the Coronavirus Relief Act, also known as HR 133, right? Very interesting name. That has passed, and that passed right at the very end of the year last year. And so the last few weeks have just been a fury of new information. SBA has come up with some new guidance, right? And there's a lot of guidance that hasn't yet come. We will most likely see that come right in the middle of February. So everybody's kind of on that front trying to understand new information as it's being shared with us. So we know that there are changes to the existing program, right, and new information slowly being released. We also know when you're slowing down and reading through the bill that there's going to be a strong audit oversight, right? And so more money has been allotted to SBA and to the government in order to make sure that business owners are utilizing these funds from the PPP program, from the EIDL program in the right manner. Right? So when you read that language and you see how much money they're putting into that effort, my job here is to make sure you guys are prepared, all right? There's going to be massive audits. So borrowers are supposed to hold on to their documentation in connection to any of these CARES Act funds. Now, typically they say the PPP funds, but I'm just going to put it out there that I really want you to hold on to your documentation for both EIDL funds and PPP funds for the next 6 years, right? That's the look back period by law. All right, our PPP lenders, if it wasn't bad for them before, like I feel so bad for them. It's gotten more complicated to be a lender providing these products during the current time, especially with the whole PPP second draw situation. There's a lot of nuances and there's a lot of audit work that they're having to provide. Now, I say that because just like before, even more so, they're not going to be able to answer a lot of questions because they're actually on the ground trying to make this all happen, right? And they're focused on their end of it. So that's where your SBDC team is there to support you, to try to give you the other answers to those questions that maybe you can't quite get from the lenders because they're so busy. But ultimately, the responsibility and liability connected to proper use of funds, avoiding penalties, right? That falls on the business owner themselves. And that's what we're trying to help you with today. So our agenda has slightly changed from my previous presentations because of the new information. We're going to go over quickly what we knew about this whole SBA forgiveness application and process before it was unveiled. Right, we always have to know where we started from and connect the dots. Then we'll go into new details that have surfaced, and then I'll add in the new regulation that was just passed within the last few days, if not weeks, okay? I know, new information is coming up almost daily now. All right, we're going to go over some sample applications for the forgiveness conversation. Now, I'm just going to warn you, one application that's really sought after right now is not yet been released. but we anticipate it being released anytime now, right? I'm looking every day, multiple times a day for it to come out, and I'll share it with you. But when I checked earlier today, it had not yet been released. Now, there's new funding that's come out through this HR 133 Act, and that's called the PPP Second Draw Loan, right? And that actually just launches tomorrow, Wednesday. That's the first day anybody can access those funds. So I've actually got a copy of the application, which you can download from sba.gov. We're going to walk through the application. I'm going to give you some quick details on that funding option because I don't want to leave people off of this whole PPP conversation without that. All right. And then we're going to end the conversation on important details to remember. Now, your time is valuable to me, so I'm going to go through this quickly. But I want you guys to know that if you have questions, I put my slide up at the end. You can ask questions. Also, too, you should receive, I believe, some copies of the slides, if not maybe a recording at the end. All right, so I'm not going to leave you high and dry, but we have so much information to go through. I'm going to do my best to get through every bit of it. All right, so remember I told you that we have to understand where we started, okay? Because this wild and wet journey takes us in all kinds of places, but you have to connect the information. So where we started is they unveiled this whole PPP Act through the CARES Act back in March. Remember, early part of April, people started participating. When they unveiled the program, we were told originally that business owners were only given 2 months 8 weeks worth of payroll and essential non-payroll support due to a mandatory shutdown. At the time, that first round of PPP funding, business owners could borrow 2.5 times their historical monthly payroll costs. All right. And then we were told that 75% of those funds had to be used for payroll, right? And for them to understand that we did that, right, to measure the outcome, they wanted to see that our full-time equivalency headcount, also known as FTE, was reinstated by the end of that covered period, or 8 weeks, and that the salary and wages being paid to those employees was roughly 25%, or within 25% of those pre-disaster wages, what they were being paid before. That means we had to pay them 75% of those pre-disaster wages. All right, so that was 75% of the funds. The remaining 25%, that could be used for those approved non-payroll uses, mortgage interest, rent and lease payments, and essential utility expenses. All right, what we know now is very different. We had in June the Flexibility Act passed, which changed it from just 8 weeks worth of covered period or the time that you could spend or use those funds. And they expanded it to either 8 weeks or 24 weeks. Now, a lot of business owners are going with the 24-week option because that was more realistic for them with the reopening. Okay, and business owners saw a change in that percentage of what they had to commit to payroll in order to find full forgiveness. So remember, it was originally 75%. Well, they lowered it down to 60%. So 60% of all PPP funds must be used for these approved payroll uses with the same 2 measures or metrics, that our full-time equivalency headcount, or the FTE, has to be reinstated by the end of that covered period, right? Or that the salary and wages being paid to those employees are within 25% of those pre-disaster wages. Now, they came back and redefined pre-disaster to focus just on the first quarter of 2020. Right, and so that difference of that 100%, right, 60% goes to payroll, right? The other 40%, no more than 40%. And by the way, that's a little tricky, okay? Right, 40% can be used on these non-payroll uses. And as of the end of last year, when they passed the HR 133 Act, they changed that, all right? So they allowed for more expense options, and they made it retroactive. So if borrowers from the original PPP round had not yet filed for forgiveness yet, and that was a lot of people, they were confused, they were waiting, they're trying to get their information from their accountant before making a move, right? They get to benefit from this, right? So if you haven't filed for forgiveness yet, you now have different spending categories that will hopefully help you meet the usage of funds appropriately and show where you've dished out all this money so that you can find full forgiveness easier. So let's go over those new categories. So there's the original mortgage interest, rent or lease payments, and essential utility expenses. People knew about those, right? Now they've added what they call covered operation expenditures. So let's say you had to switch up in the middle of the year and you had to maybe get some software in order for your team to be able to remotely work, right? Or maybe you had to hire an accountant or get a new software system to keep track of hours because you knew you had to keep up with all of this FTE conversation, salary, hourly wages, or you had to pay money to an accountant, right? And all of those expenditures happen after March 1st of 2020 and took place during your covered period by the end of December 31st of 2020. All right. So if you incurred these type of expenses for operating expenditures, those are now allowable in your use of funds to explain your PPP funds. Isn't that cool? All right. Next one is going to be covered property damage costs. Now, luckily, we didn't experience a lot of that here in Texas, but in other areas of the country, there was a lot of riots and business owners had seen their business property damaged because of looting or just, vandalism. And so if any business owners had suffered that type of loss, anything that wasn't covered by the insurance company that was, not covered, that is now an allowable expense under this PPP forgiveness process. Right. In addition, any type of covered supplier costs. There's a lot of businesses that saw supply chain interruption, right? And so their cost of goods went up astronomically, which made it impossible for them to be profitable, right? And they're just hanging on, right? Now those covered supplier costs can be included in these expenses for the forgiveness process. Right. One more thing, right? They added in covered worker protection expenditures, and that is a mouthful, but that's the PPE, right? The masks, the sanitizers, the guards or shields in order to separate workspace or client space, right? Now, as I say this, we now start to see more overlap in expenditures between the SBA EIDL program. So if you received SBA EIDL funds and you received PPP funds, now that call to keep separate records or make sure that you've documented all use of funds for the government is, you're heightened. You have to make sure you're protecting that, because if you provide that type of documentation for the PPP funds and then also try to show it in an audit for the SBA EIDL funds, that's that double dipping that SBA continues to make you aware of and to try to get you not to do, right? So make sure you're keeping good track of your spending. All right, so now all of this is allowable for the forgiveness conversation under these PPP program. Now, I'm just going to foreshadow that we do have the PPP second draw coming out, right? I promise you we'll talk about that towards the end of the presentation. Now, this new update on the forgiveness process mirrors over to any additional funds that borrowers take under that PPP second draw. All right, so there's another process. They're two separate loans. They're not mushing them together, okay? You have to keep them separate. And so you would file another forgiveness application under the second draw, and you'd be looking the same guidelines for that forgiveness process as well. All right, it's clear as mud, right? Okay, let's keep going. So let's talk about clarification of tax treatment for your PPP loans. That changed on a dime at the end of December when they passed this act. All right. Originally, IRS had come out at the end of the year, right? Before this HR 133 Act came out and clarified and said, no, you cannot include any expenses paid with any of this CARES Act money in your normal tax deductible normal expenses. They said you had to separate it, right? You also didn't have to include any of the assistance you received in gross revenues. You didn't pay taxes on it, but you weren't supposed to get originally any benefit from using those funds, right? They switched on a dime. Now they've changed it. All right, so let's go over this. Now, gross income that you received from either your PPP funds or your EIDL funds or any type of assistance from that CARES Act program is not included in your gross taxable income. Woo! All right. It's also not included in any calculation for this PPP second draw. Okay. So you would take this money out of that type of financial picture to see whether or not you qualify for that. It doesn't count in your overall profitability that they're measuring. Okay. Next, they also certify that you can now include any of these expenses, right, that are normal expenses, that are allowable deductions under the IRS with your 2020 tax filing, right? So not only do you not have to pay taxes on it, but now you can include all of those expenses. You don't have to separate them out. All right. So there are some slight differences as far as tax years for things like targeted advances for the EIDL advance. Okay, that program just came out with additional funding. So we will talk about that in another presentation, not today. I had to separate that out. And the grant for shuttered venues, that's another conversation. But those are also tax effective for the end of the year of the CARES Act 2020. Okay. All right, so let's talk about the repeal of the EIDL advance deduction. If you had caught my presentation before on this topic, I make a big deal in that to talk about the fact that if you received an EIDL advance, also known as the EIDL grant, that those funds were supposed to be repaid back, right? Because they couldn't treat your competitors different from you, and it was an added advantage. Well, they've taken all of that back. All right. I know it's like hokey pokey here. All right. So you don't have to pay that money back if you received an EIDL advance or an EIDL grant, right? You can get the forgiveness for that, right? That's not being repaid back. And you can get or qualify for 100% forgiveness as long as you follow the required forgiveness details we're talking about, right? There's no repayment of that EIDL advance or EIDL grant. Now, just real quick, we'll talk about it in the next presentation, but they did open up more funding for the EIDL advance. And although it had stopped kind of mid-course, now it's been refreshed. And so any business owner that did not have the benefit of the EIDL advance that's in a low income area, okay, that's like a hub zone area. They haven't fully given us the maps yet. That still is yet to be dished out. We should see that by the middle of February, right? You can go back and ask for that EIDL advance now that the funding has been replenished. Okay. Now, by the way, I was on the call with SBA yesterday. We were trying to figure this out. It is not yet available. Okay, so it has not yet hit the scene where you can get that money. Another little added advantage, if you received the EIDL advance and you are a distressed business, they're saying that you can request a second EIDL advance that goes above up to the maximum amount allowable, which is that $10,000 per each eligible business. All right. So for instance, let's say I had received the EIDL advance. I only had 2 employees. They only gave me $2,000. If I'm in an economic distress, I can go back to SBA and I can say, hey, SBA, I need more help. And they can give me the difference, right? That $8,000 to a maximum of $10,000. Now, they did change the time frames on that. So before the EIDL grant came out to you really quick, remember it was like 3 days, right? They now have extended it to 21 days. So they're taking more time and due diligence. So we will all be waiting to see how that kicks off. All right. So let's talk about compensation caps. So we're back on the conversation for forgiveness. So I often say the way we come into this PP program is the way we find our way out of this PPP program. All right. And so that's this understanding of how much is eligible payroll allowance for each employee, right? So remember, there's a cap of $100,000 annually. Well, coming out of this program through the forgiveness, we have those same $100,000 annual caps. So if we're choosing an 8-week cover period of time, it's capped at $15,385. All right, so that would be 8 weeks worth of a $100,000 annual cap. If you're looking for a 24-week cover period of time, that translates to $46,154. All right. So again, the way we come out or come in is the way we find our ways going out. Now, the owner compensation caps, right? That they did not change. Just want to make sure everybody understands. Owners are defined, owner employees are defined as having 5% or more ownership interest in the business. So if you're one of those individuals, in addition to having the 100,000 annual cap, they also want to make sure that you cap your own personal income for the forgiveness spending conversation at either 8 weeks worth of your 2019 compensation, if that's what you're going with, an 8-week covered period. And that is also capped at that $100,000 annual figure of $15,385. And for a 24-week covered period of time, if you're actually capped at 2.5 months worth of your 2019 compensation, which was what you used to get the loan originally. Okay, and that's capped at the $100,000 annual figure 2, which translates to $20,833. Lots of details, right? Remember, you'll get a copy of the presentation. All right, so we have new non-payroll eligible costs. I talked about that just a moment ago when we were talking about the changes, right? So the new eligible covered or non-payroll costs include that covered operation expenditures, right? Payment for software, cloud computing, human resources, or accounting needs just to keep up with the change in the environment, right? Covered property damages, covered supplier costs, and of course that covered worker protection expenditures or PPP. All right, so our normal non-payroll eligible costs have compensation caps as well, right? So that has not changed. I'm going to just go ahead and revisit these little bullet points and then summarize it quickly for you. So number 1, if the borrower is renting a space and they sublease a portion of that space, the borrower can only claim that net rent or that net expense. So if the rent is $7,000 per month total and they sublease and collect $3,000 from somebody else, they can only claim on their forgiveness spending records $4,000 of that non-payroll expense. Okay, 2, if the borrower has a mortgage on a building and they lease 25% of the fair market value of that building, they can only claim the 75% of that mortgage expense for their forgiveness. Again, there's outside income coming in to offset the expense. All right, 3, if the borrower shares their space with another business, they must prorate the rent and utility payments in the same manner as they did on their 2019 tax filing, or if this is a new business, what they expect to file in their 2020 tax filing. All right, this is not new, right? We learned this early on when people were applying for the PPP loan. They are anchoring your expenses to your historical financial picture. So if you had rent expense or mortgage interest expense in your 2019 tax filing, it was allowable to include that for this PPP forgiveness spending as well. Now they added that up and said, okay, well, maybe there's been some changes. You just have to anchor it to either 2019 or 2020. So you can't claim an expense for the forgiveness and not show it at least on your 2020 tax filing expenses. Hopefully that makes sense for people. All right, if the borrower is paying rent to a real estate holding company for which they own, we call that in the SBA world an affiliate business relationship, similar ownership, right? The borrower can only claim that portion of rent that does not exceed the monthly interest payments on the loan for that covered period. All right, so rent or lease payments, mortgage interest. Affiliate businesses kind of have their one foot in each bucket, right? Well, mortgage interest tends to be smaller than the rent expense, so they're having you choose the mortgage interest expense in that scenario. Right, if the borrower works out of the home, they can only include that portion of the non-payroll expenses for the covered period that were deductible on the borrower's 2019 tax filings or what they expect for 2020. All right, so home offices have typically a percentage of your office out of your home, right? Not the entire mortgage interest expense or the entire utility expense for the entire home. Okay, so you're going to have to anchor that percentage to either 2019 or 2020. So make sure you're keeping up with that. All right, change of ownership. SBA got wise back in October that business owners were not necessarily going to survive, right? And what did that situation do for any of the SBA documents and these loans that were out there, right? That would be problematic if people just dropped off the face of the earth and didn't file any returns and didn't report what they did with the money. They had to protect themselves. And so they came up with a kind of protocol if you are deciding to change ownership or make any material change in that structure. All right, so they basically have identified that if you are, 20% or more of your ownership is changing or being sold or transferred, you need to reach out to SBA's PPP lender, right, whoever's handling your loan, and make sure that you give them a copy of a written notice you're going to make these changes, right, and a copy of the drafted agreement. You aren't supposed to do it before you get permission, okay? So that was transfer of ownership 20% or greater. They also say you do the same protocol if you're selling or transferring 50% or more of the assets of the business based off of a fair market value, right? Or if you're going to merge or transfer into another entity. So just also note that if you're doing any of those transactions and you're stepping away from the business, you're still going to be required to hold on to copies of this documentation, right, for 6 years, even if you sold your interest in the business. It does not take you off of the loan or excuse you from those obligations you signed to. All right, so forgiveness application. I have seen everything on this forgiveness application situation right now. Lenders are taking a step back because there's a lot more that they're having to be responsible for, as well as this whole PPP second draw kicking off again. I've had borrowers call me and say that they thought they submitted their application for forgiveness months ago, weeks ago, and the lender has kicked it back and asked for them to voluntarily withdraw it. Okay, so if you're getting those messages, you're not the only one. Do not panic. What's happening here is those PPP lenders know that they've got to make sure that they're following protocol for SBA, right? They are held to it. And if there's a time crunch, for instance, you submitted your PPP forgiveness application a while back, remember, these PPP lenders only have 60 days in order to submit that back to SBA. They could be having some logistics issues, and by asking you to withdraw it, they're trying to help solve those. Regardless, I don't want people to get spooked. You do need to listen to your PPP lender, right, and allow for them to walk you through this process. That's going to look different for each PPP lender. But the portal was made available in August. It's still open. There are more requirements for lenders to check and audit before they can submit it. So a lot of lenders are going to have to go back and review some of these files to make sure. We do also know that there have been material changes. For instance, the new non-payroll categories, right? We also understand that some business owners who had filed for forgiveness early and might have already received the forgiveness applied to that outstanding loan and also received notice that they had to pay back that idle advance. Remember that? Well, now SBA and the lenders are working out protocol to make those borrowers whole, basically having to go back in time and make sure that any funds that were owed to them are paid to them, right? So you'll be listening to your PPP lenders. There's a lot of work happening here. Just make sure that you are filing for forgiveness when you're complete with your documentation, because that documentation is key, right? All right, so let's talk about new details. I think I got you up to speed quickly on where we were and kind of the new changes, right? So let's talk about the forgiveness applications. Let's see what's on this front. We know that there is a brand new forgiveness application that is coming anytime. I mentioned that I am checking that daily, if not multiple times a day, right? And this forgiveness application is going to have about 80% of the qualified borrowers filing it, right? It's a one-page form that they've promised us for all loans that are under $150,000, right? We don't have it yet. When it becomes available, I promise you, I'll make sure that your SBDC partners are made aware, and we'll probably do another training so you guys can see that and see how to fill it out. What I can show you today is going to be the 2-page Form 3508S. S stands for simplified, right? And the 3-page Form 3508EZ. And of course, the longer version, right? The 5-page, just Form 3508. We'll still talk about those. And of course, go through the definitions, the time frames, and of course, the ability to calculate forgiveness. All right. We also know through this whole forgiveness application that there's quite a bit of flexibility, right, within these timeframes, as well as these wonderful, clear, safe harbor definitions and guidelines. By the way, the flexibility in timeframes, the safe harbor guidelines, those have not changed, all right? And those will be, again, mirrored over for forgiveness for anybody applying and receiving this PPP second draw. Okay, so before we can really get into the weeds with the forms, I gotta at least bring you up a little bit on definitions. And I'm not going through the whole definitions because we don't have time for that, but I did want to make sure that we revisited the safe harbor. Okay, let's revisit safe harbor. So remember, safe harbor is when you meet this requirement, right? You don't find penalties, right? You're safe. You don't have to pay additional penalties. And so the government came out with 2 specific safe harbors that really covered those 2 metrics that we're trying to complete to show we did what we're supposed to do with these funds. And so let's talk about the nuances of what they mean. All right, so we have 2 different what we call FTE or full-time equivalency, remember that's that head count, safe harbors. There's FTE Safe Harbor 1. Safe Harbor 1 means if you're a business that maybe saw a reduction in headcount or number of hours worked by your employees because you were following guidance from HHS, that's Human Health Services, or the CDC, Center for Disease Control, or for OSHA, if you're following that guidance and you physically couldn't open during that covered period of time and give people the same amount of hours, right? Then you were able to check a box, claim this FTE Safe Harbor 1. We'll go over that in more details as we go through the actual forms, all right? Then there's what we call FTE Safe Harbor 2. Safe Harbor 2 is where you as a business owner maybe had to furlough or lay off employees and you tried to bring them back, but you had a little bit of problems getting back to the same number. If you can show those problems or that lost headcount tied to one of these 6 situations and document it well, then you find that beautiful safe harbor. So those 6 situations include employees that refuse to return back to work when you provided them a written offer. By the way, in this whole HR Act, this HR 133 Act, right, they're under another section that I read. They're going to be trying to come after individuals that took the unemployment benefits and didn't return back to work. And I have a sneaky suspicion they're going to use information from the audits from this PPP program to help document that, right? These safe harbors, I feel, are going to become kind of a ploy into understanding people who have maybe abused the system in other ways. So just make sure you're keeping up with your documentation should anybody tap on you for it. All right. So employees that refuse to return to work after written offer, just make sure that you have a copy of the written offer to them and you have a copy of their written response refusing to return. That's the key that you want. All right. 2, they had to be fired for just cause. So you want to make sure you have your documentation for that just cause. 3, the employee resigned, right? So you should have a written resignation letter. 4, the employee voluntarily requested and received reduced hours. So they requested to reduce their FTE. It wasn't something you wanted to do, and you accommodated them. Make sure you're documented on both the request and your written response, right? And then, let's see, 5, you maybe had to reduce some hours for an employee, but as soon as the funds came in, you tried to restore them, but it was refused or rejected by the employee. Document it, all right? Both your letter to them and their response back to you. And then remember, if you have had a hard time trying to refill positions because you couldn't find a qualified candidate, you want to document your journey, right? That you posted the ad, that you received X number of responses, maybe that you even interviewed individuals. Just make sure you can document it. Now, anytime you're taking a 24-week cover period of time, that's 6 months, right? Anytime you're taking that, there's more of a heightened reason to try to rehire or refill those positions. If you don't have that, you got to document why. All right, so switching gears, that was FTE. Let's talk about salary hourly wage reduction. That starts to become a real slippery slope, right? Because there is a connection between hours and wages, right? There is a connection, and you have to understand for a salary hourly wage reduction penalty, you would have had to reduce the amount being paid per hour to an employee, right? And I'll give you an example of this in a minute. So let's say we paid people $50 an hour, and when this whole situation came, I still required them to work 40 hours a week, but I wasn't able to pay them $50 per hour. I paid them $25 per hour, right? So I literally cut their wages by reducing the amount being paid per hour. That is a true salary hourly wage penalty scenario. And if I don't bring that wage back up within 75% of that $50 per hour, right? If I don't bring that hourly wage back up by the end of my covered period, then I could be seeing a penalty. But if I bring it up at the last nick of time, right? That last payroll period, there's a box, and I'll show you where it is on the actual forms, that you can check and you can avoid that, right? That's the safe harbor. You just have to bring those wages back up at that last payroll period before it ends. All right, so there is a relationship. The actual forms ask you to look for gross wages. Just make sure you understand that either salary or hourly wise, if you reduce their compensation to less than 75% of what you're paying them in the first quarter, that is a true salary hourly wage penalty. Woo! We're covering a lot, right? Okay, now we're diving into documentation. So I told you that they're going to audit, right? They've got millions of dollars, millions and millions of dollars. I think we're probably getting close to $1 billion worth of audit money, right? Just to look over these loan situations. So they're going to be using it, and your documentation is going to be critical for proving your point. So let's talk about that. SBA always requires your documentation, what I call a two-prong process. The first prong is always your bank statements. You have to show where you physically spent that money during your covered period, right, or during your alternative covered period, or if you're relying on an accrued expense scenario, then it has to be within that first billable cycle after the end of your covered period. All right, so bank statements for that time frame, and the second prong is always going to be your added detail, right? So let's apply the two prong to payroll. Your bank statements for your payroll, as well as your payroll processing records, right? 941s, which are your quarterly tax filings, right, for your employee wages, that's going to become critical for this PPP second draw, right? What I've read is that for them to verify that you in fact did pay your employees, or if you're using a 2020 wage scenario, and we'll talk about that in a minute, as compared to a 2019, they're going to want to see your 941s or your IRS records. They don't rely on just your payment processing statements like they did for the first draw. Okay, that's a big difference. I just want to make that clear here, because the documentation includes your payroll processing records, which tell you the name of the employees. They're going to also be looking for that payroll tax filings if you typically file 941s. If you don't, just make sure that you have a copy of as much of a hard record of that type of payroll as possible, and you'll want to file your tax returns for your 2020 tax year quickly. Okay. All right. And then any type of proof of employer contributions. Now, by the way, they did update that for us, employer contributions. And one of the new details is they stated clearly that employers could include not only just employer paid health benefits and retirement, but they defined health benefits to include vision, dental, disability for life, or life insurance and disability insurance. Okay, so they expanded a little bit to make sure that people were clear on health benefits. That's out there. All right, so any type of canceled checks or receipts or statements to help get you a complete two-prong review, just make sure there should be some relationship between the two. For instance, the number on the payroll document should meet the number on the bank statements, right? Or the payroll processing records. You should be able to show correlation that you, in fact, are representing the right information. All right, for non-payroll, it gets sticky, okay, because they want more information. They want to see, for instance, mortgage interest, mortgage being real estate or personal property, by the way. So if you have a commercial vehicle or equipment, that's included. You need to have your bank statement with your lender statement or a loan amortization. Remember, they're picking up on the mortgage interest expense for that covered period. All right, and it needs to go all the way through the 1 month past the end of your covered period. All right, and then rent or lease expenses, make sure you have a copy of that lease agreement. I had one business owner send over a copy and they thought they were good. And then I picked up on the fact that their lease agreement didn't show where the lease was enforced before February 15th of 2020, right? And they had picked up a lease in March. So that didn't get covered, right? They had to take that out of their eligible PPP forgiveness. That wasn't going to be included. So just be careful. You need that lease agreement to show you are, in fact, accommodating to all the guidelines. And then copies of any kind of canceled checks or statements from the landlord showing that you've made those payments. And you need to go from February all the way through 1 month past the end of that covered period. And then, of course, your utilities. Remember, there's 6 utilities eligible. And that's going to be your sorry, there's some feedback there. It's going to be your electricity, your water, your internet, your phone, waste management, and gas. All right, those are the 6. Now, they did add transportation. I'm getting a lot of feedback from people on that. Transportation was further defined back in August, I believe, and stating that it was for a transportation fee for one of the 6 utilities. If you were a truck driver and you had gas expense, right, they did not necessarily say that that was an allowable utility. Right. So just make sure you're careful about that. It's just one of those 6 utilities. Transportation is for one of those 6 utilities. Okay, so the other documentation for the 4 new categories, they haven't given us an update. I imagine that will come out with an updated application for forgiveness. Remember, we're still waiting for that detail. And as soon as that's out, I'll make sure you guys know. My best advice to you is to stick to the 2-prong system. And if you can document it 2 different ways and you know that it fits one of those categories, you're safe to try to apply for that in your forgiveness application. All right, so remember, as you start your own applications, you want a calendar, a lot of moving pieces. You want a calculator, just addition, subtraction, and division, nothing fancy. You want all your original PPP loan documents. They're requiring that for forgiveness as well. And then all that support documentation we just talked about. And just be patient with yourself, right? As these pieces are moving and changing, it is stressful, right? Do not expect yourself to do this overnight, even with the forms getting easier. Make sure your documentation is solid, is tight, right? Because that's what is going to be important for your audit process. And by the way, this new update to this forgiveness application, nothing says that they're lightening the documentation load. Nothing says they're lightening that, right? In fact, they've come out and again confirmed multiple times that they're going to audit, and everybody needs to hold on to their documentation, right? That's the message coming out. So even if the pages are reduced, government is really good at reducing pages. That doesn't mean that your obligations have reduced. In fact, it's kind of the opposite. Your obligations to certify and to provide your document are heightened. It's put on you, the business owner. Okay, so HR 133 Act, 1-page forgiveness application, not out, right? But what we do know is for loans that are under 150,000, not 150,000, right? Under 150,000, they're going to get a 1-page form. Now, I'm going to go ahead and relate that to the 1-page form we already have, right? That's that 3508S. I have a feeling it's going to look a lot like that. Right, so we'll talk about that as a role model, but it still hasn't officially been confirmed. You're still required to keep your documentation to all your expenses. Remember, as they expand that expense category, we have to keep extra good, diligent look at any idle usage of funds versus our PPP funds. We don't want to be accused of double dipping. All right. You're still required to meet those requirements for the program and you're self-certifying, so that's all on you. And you still have to meet the FTE requirement. Nobody's excusing you from that headcount requirement. Everybody has to meet that or meet one of the FTE safe harbors, right? Safe harbor 1, right? Or safe harbor 2. Okay, so let's jump into that form 3508S, S for simplified. Remember, this is that one-page form we already have, and this was actually created back in October for business owners that had a PPP loan of $50,000 or less. $50,000 or less, they simplified it to one page, and I have a sneaky feeling that this is going to be very similar to this upcoming form that they still haven't named, right? All right, so the way this is going to work for us to get out of here in some decent amount of time is I'm going to go over this box, this really top portion, just once. All right, and you're going to see two different applications, but I'm going to skim through that because I don't want to waste your time. All right, at the very top, I call this our deja vu box. All right, because this is exactly the same box and same format you filled out when you applied for your original PPP loan. Right, same contact details are going to be needed on the forgiveness application. Right below that, it's going to ask you for your SBA PPP loan number. This is also known as an authorization number. Now, you might find that number if your lender used the SBA forms for closing your loan. You would look at what we call a promissory note, also known as note, N-O-T-E. Right? And typically, if they use the SBA forms, there would be an SBA shield to the top left next to that note term. All right. Now, not all lenders use the SBA forms. They weren't required, right? But if they did, it would say SBA loan number. If you don't see it, do not panic. I promise you that your PPP lender has this because they would have had to file Form 2487, I believe, and that would have been the form SBA used and gave one of these numbers to. So they'll have it if you don't. Next, you're going to put your PPP loan number, your lender's PPP loan number. So think about it this way. In their system, right, they've given this an account number or a number to note the loan, right? Whether you're accessing that information online through an online platform, or if they've given you maybe a funding statement, maybe a detail to your closing and it was referenced on there for their internal processing, or if it's on a bank statement somewhere, right? Typically, you'll be able to find their account number for the loan. You'll put that in there. All right, next, they're going to ask for your PPP loan amount. So that's going to also be on that promissory note, right? And it's also going to match the amount that was deposited into your bank statement or into your bank account. So that bank statement that you're going to have to collect anyways, just confirm you're using the right amount. Okay, and finally, it's going to ask for your PPP loan disbursement date. I like to say that loan disbursement is a fancy way to say deposit, right? So when were the funds deposited into your account? Oftentimes, it was after the original loan contracts, right? You don't actually have to count or start the clock until you receive the funds. So this disbursement date is really important, and it should match your covered period date, okay? The start of that covered period or your time frame. All right, next for employees, this is super confusing. All right, in fact, I just saw right before I got on with you guys where it confused the whole SBA team in one area that I'm working with, okay? Because the definition for that full-time equivalency headcount got redefined when they came out with this forgiveness process. And it's getting continuously redefined, all right? So employees at the time of the loan application is going to be that full-time equivalency or FTE in your payroll period inclusive of February 15th of 2020. Okay, so you're going to go back to that payroll cycle, that payroll processing period, and you're going to look at your headcount. And there's two ways to calculate your FTE. There's the easy way, where for every full-time employee, you count them as 1.0 FTE, and for every part-time employee, you count them as 0.5 or half an FTE. That's the easy way, right? So you would look at how many employees you have and just name whether they're full or part-time and give them a head count. right? And then the longer way is where you take the average number of hours work during that covered period, or if you're looking at this before disaster time frame, that period inclusive of February 15th, you're looking at that and you're figuring out what the average number of hours worked per week divided by 40. Now, in a minute, I'm going to give you an example of why there's a difference and when it might be beneficial to you. Just remember, you're going back here and you're most likely going to have a different number here on the forgiveness application than what you had originally when you filed for the loan. And that's because they've redefined FTE. That's a whole new definition they created here. Okay, so do not panic. The other thing is owner, employees, shareholders for the business, you are not considered an employee. Even if you did a lot to get yourself on the W-2 list, right, and maybe you paid yourself on that payroll processing, they're calling you an owner or an owner employee. And so you are not in this head count. Now that becomes more evident when you look at the other forms of this forgiveness application. They clearly spell it out to you that you are the owner, not the employee. So remember, this is truly an employee. It is a W-2 employee, not a 1099. Right, and that's what confused my SBA friends. They're applying for some of the new SBA products that are out there on the market. Again, that's another presentation. Okay, there's new products out there, and they got all confused about FTE definitions versus what they typically look for because they're different. They're different. Okay, now the next question is employees at the time of the forgiveness application. So that's going to be the end of your covered period, that last payroll cycle, right? So that last payroll cycle, because remember, once you end that payroll cycle and you've ended your covered period, you don't have to retain the headcount if you don't have the funding, right? So you don't want to, apply for forgiveness 10 months later, which is perfectly eligible, and then have reduced the headcount, and then somehow kind of put some little mark against you that there was a reduction in headcount. They're looking for the end of the covered period here. Okay, next is going to ask you if you had any idle advance amounts or idle grants. Right? So if you took an idle advance or idle grant, no problem. In fact, there's more money available as we talked about, right? You'll put that detail here. It has no negative or adverse effects to your forgiveness nowadays. They've repealed that. Right, and then over here, your idle application number, you'll put that in. In this little example, they didn't have one, amazingly enough. Okay, down here, it's going to ask for your forgiveness amount. So your forgiveness amount is going to be equal to either one, your total loan amount, just as this is, right? They borrowed $25,000, they're asking for $25,000 in forgiveness, or two, the amount you can document in appropriate spending. Okay, so let's say that the Best Biz LLC here couldn't document the full $25,000 in funds in appropriate spending in accordance to the guidelines here. Let's say they were only able to document $24,000. All they can ask for forgiveness is that $24,000 because they didn't spend the funds within the appropriate amount of time. That means they have to be paid back. They didn't need them, essentially is what SBA is saying. All right, now if you have more expenses, good for you, right? This money came at the nick of time, but you can't request for every penny to be forgiven, only the maximum amount of the loan that you received. All right, so see how easy that was? Again, I'm not going to go through this again, but pretty short and sweet, right? They still want your FTE, right? They still need to make sure that you met those requirements. They want to know how much you spent. They're going to still require your documentation. And below this, you're still going to have to meet those requirements, right? We talked about that. The compensation caps for the owners, the max compensation for the employees, that you retain those head counts, that you follow the guidance. That's it. Okay, so we foresee that the new form is going to look a lot like this. It's just going to have maybe some different details here. Now, these same forms are going to live on because you'll be using these forms for the forgiveness for this PPP second draw if you receive those funding. Okay, so let's move forward. Remember, we're going to go faster here. We've got Form 3508. Easy. Easy was supposed to be easy, and it was, okay? But the easy form can be used by three groups of individuals or businesses. The first is going to be self-employed individuals or independent contractors, sole proprietors that have no employees at the time of the loan application, and they did not include any employees' salaries in the calculation for their PPP loan. All right, so these are truly sole proprietors. These individuals would have most likely came to their PPP lender with what we call a Schedule C. That's off their personal tax return. The Schedule C shows the most amount of money they made, and then it subtracts out the eligible deductible expenses. And then on line 31 is what we call the net taxable income. Well, SBA said that line 31 or net taxable income was their personal annual pay, right? Their payroll for themselves. So those individuals can file using the easy form, right? If that amount was over 50,000, right? Because otherwise you'd be using the form 3508S. Right. The second group of people would be borrowers who didn't reduce the annual salary or hourly wages of any employee by more than 25% during the covered period, alternative covered period, and they didn't reduce the number of employees or the average paid hours of those employees between January 1st of 2020 all the way through their covered period. Now, I think of these business owners as being rock solid, right? Like the storm came, they weathered it. They needed the support, but they weathered it. But they didn't let anybody go. They kind of stayed as close to normal as possible, right? Those individuals can file the easy form. The third group are going to be borrowers that didn't reduce the salary or wages of an employee by more than 25%. Remember, that's that salary hourly wage conversation. So as long as the salary amount or the hourly amount, right, did not reduce more than 25%, they're good, right? But they had a unique situation in this group 3. They were unable to operate during the covered period at the same level of business activity starting February 15th of 2020 because they were complying with HHS or CDC or OSHA. I give you an example of a friend that kind of fell in this bucket. She had a daycare, and when the daycares were forced to only allow for essential worker children to come, right, that reduced her head count. And then they were only able to put so many students in a room, which reduced her teacher count. Now, she still paid her employees within that 25%, right? She was conscious of that. But they didn't technically work those hours. So for her FTE side, she had to claim the safe harbor 1. All right. So in that scenario, that gives you an idea. These people did everything they could. These were conditions outside their control. But again, there's no penalties having to be calculated. And that's what makes the form easy. They're not calculating penalties. All right. So just to kind of zoom in and remember, I'm not going over this again, right? Just pick up on some added detail. It looks like this is a very small business, a sole proprietor. And the reason why I can pick up on that is because the employees at the time of the application is 0. Remember our definition? They had no employees and they didn't include any employee wages in the loan amount for their loan. This 0 is okay. Right, and that's probably different from what they put on their original PPP application because they would have put 1, meaning themselves. The new definition of FTE is different. Okay, so they put 0. Right, and at the time of the application, right, the end of that covered period, they again had no employees. Right, they received an idle advance. Looks good. Now, the difference between this form is that there is a little bit of calculations. So for the 3508S, remember that one page that they didn't do anything? They just put the amount of their spending. Now they're having to break it out, right? So in this case, line 1 is going to be the total payroll costs. So this would be the total payroll that the owner paid themselves. Now notice this was done before the form 3508S came out, right? Because the amount is low. But notice that the payroll amount or the loan amount is exactly the same as the payroll. Right? I'm just going to draw a correlation to some of this guidance that we're supposed to be following. Remember, for full forgiveness for the owner compensation cap, that they have two choices. If they choose an 8-week compensation, they can only pay themselves 8 weeks worth of their 2019 pay, right? And so this person would have used their 2019 Schedule C. Remember that line 31, that net taxable income? Well, if they were using an 8-week compensation or 8-week covered period, they would take line 31 and divide it by 52. That allows for them to understand how much they paid themselves per week. And then they would multiply that weekly amount by 8. Now, the way this was all set up was off of the original rules. Remember, I'm connecting it all for you, where 75% had to be payroll and then no more than 25% for non-payroll. Okay, so on that basis, when they originally set it up, the 8 weeks would have been 75%. This particular business owner would have had to find full forgiveness, really document the rest of their spending, right? So they would have had to have rent or lease payments or utility expenses. But if they used the 24-week covered period, right, this particular business owner, because they're so small and there's no other employees, they would have just had to show where they paid themselves the money, because this amount equals directly to the 2.5 times their personal income, right? So in that case, they simplified the whole rest of this. They didn't have to document the rest of that. Okay, so that's kind of how they're doing this on that very small scale. Line 2 is any mortgage interest. Line 3, rent or lease payments. Line 4, utility expenses. Just remember, you have to have your support documents to back this up, otherwise the lender won't accept it. Right, and then below that, starting line 5, you start adding up your allowable expenses to come up with a total. All right, and then they have you figure out your potential forgiveness amount 3 different ways: the total amount of your spending, your PPP loan amount, and then 60% of your payroll costs. And by the way, if you do a good job with your payroll, meaning that you spend 60% or more on payroll, then this number is going to look really large. Just follow the instructions right here in the parentheses and you'll get to the right number. Okay. And the last line, line 8 for this form, is you have to select the smallest potential forgiveness amount. And that's the amount that you're filing for forgiveness. Okay, pretty simple, right? Okay, we're all shaking our head. We got it, Rebecca. All right, so remember, this is my way of getting my head around all these moving pieces: covered period, right, versus the reference period. And you had to kind of come up with a story, right? So this is how I kind of came up with the story and figured out what kind of key pieces of information did I need to document and make sure that I back myself up on any of these safe harbors. All right, so at the very top, this is what we call pre-disaster. It's also called reference period. And for the salary hourly wage conversation, remember that's always the first quarter of 2020. And then for our FTE, right, we have these 3 options. Well, I've elected to use that payroll period inclusive of February 15th, again, the first quarter. Right, kind of localizing my pre-disaster to just one period of time. But I had to figure out, what was I paying these people? So it looks like I had 6 people on the payroll, 3 of them full-time, 3 of them part-time. Full-time people were making $15 per an hour, and they were working 40 hours a week. My part-time people, they were working $10 an hour for 10 hours a week. Now remember, we talked about FTE before. I just want to make sure I drive this point home. So there's 2 ways to calculate the FTE, right? There's the long way and the easy way. The easy way would be to give all these full-time people 1.0 credit, right? They count as one full-time employee. Remember, the easy way to count the part-time people is to just give them 0.5 credit, right? All right, so 3 part-time people at 0.5 each equals 1.5. Add that to 3 full-time. We're getting an FTE of 4.5 total. Everybody can figure that out, right? All right, now, if we're using the FTE longer calculation, we're actually looking at the average number of hours worked during that period of time. So this would be 12 weeks. Okay, 12 weeks. And then we look at the number of hours they worked for that entire 12-week period of time, divide that by 12. right? And then you would take the average number of hours worked per week divided by 40. Now, in this scenario, since these part-time folks were less than 20 hours, it actually behooves me in order to use the longer FTE calculation because I can drill into a smaller headcount requirement. And you're going to see where I need that, right? Because in this case, I'm not going to be able to get everybody back that I want to. I have to struggle with that. So going with the longer FTE calculation actually helps me meet the requirement. All right. So in this case, it comes out to 3.8. All right, so now we know where we were before, right? During the disaster, before I got the PPP funds, it looks like 4 employees were let go or furloughed, and then only 2 full-time people stayed on, right? And so that's our two full-time people. So the headcount dropped to 2.0. This is one of those FTE Safe Harbor 2 scenarios. I lost headcount. I'm trying to get back. Remember those 6 bullet points? I'm trying to get back. I need to make sure that if I can't quite get my headcount there, I know how to document it. Okay. Below it is what happened during the covered period or alternative covered period. And this is where I start connecting the pieces and seeing what I'm really dealing with. Right here on this part-time 3 person, they refused to come back, right? So hopefully I made them a written offer and they refused, and I have a copy of that written refusal to come back, but I lost headcount here, right? Part-time 2 person, they came back, but check it out, they came back at half the number of hours, all right? So instead of 10 hours, they came back at 5 hours a week. Now, if I was looking at my gross revenue change, right, to figure out a salary hourly wage penalty scenario, I would start to panic because that's, reduced by 50%. But remember, I told you, you don't truly have a salary hourly wage penalty unless you've reduced the amount per hour, or for the sake of a salary person, the salary amount less than 75% of what they were being paid before. You had 20%, 25% buffer, right? And I would have still kept them the same number of hours. In this case, I'm paying them 100% of what they were making before per hour, right? So this reduction in gross wages is an FTE issue, not a salary hourly wage penalty issue. All right, so we identified that, right? Okay, I also realized I have more of an FTE issue than I thought, so not good. Next, we've got our next part-time person, which, guess what, I saved the day. We're able to make them full-time. All right, so they were 10 hours per week. I made up, I got them 40 hours per week, and I was able to pick up my other full-time person back up, right? So when I use that same longer FTE calculation, I have to be consistent by my models here, I actually bring it up to a 4.1. Now, remember I told you full-time, like the easy FTE and the longer FTE, and if I use the easy FTE, I'd be at a 4.5, right? This is where, changing the FTE type, making it more strategic, you're able to meet the requirements. Okay, right? Okay, we all know where we are. Right down here, the total amount paid in gross wages to those employees. Gross wages is what you're counting, right? That's 18,000. You're going to see that number in a minute. All right, here we go. We have the completed Form 3508. Now, note, this is a 5-page form. You're really focused on just the first 4 pages. And unlike the other applications, you can't start from page 1. You have to start from the back, page 4, and work your way back to page 1, right? So we will come back and see this in a minute. Page 4 is what we call the Schedule A worksheet. Okay, Schedule A worksheet, super simple. You've got Table 1 and Table 2. This is a list of your employees that you paid wages to during your covered period. Okay, and Table 1 are going to be those employees that made an annualized rate of pay of $100,000 or less. And Schedule or Table 2 are going to be employees that made an annualized rate of pay of over 100,000. So remember that over the 100,000, we've got the compensation caps that we talked about. Well, that would be right in here with those compensation caps. Everybody else, it's your gross wages that you pay during that entire covered period. Okay. All right, and then we've got our FTE totals here. So we got our first name, last name of employees, the last 4 digits of their social security number. You see why I say they're going to most likely pick up on this detail in order to identify people that were offenders under the unemployment benefits, right? Because the amount of detail they're requesting from you helps them identify whether or not they truly were unable to find employment. Okay, right here in this column for cash compensation, gross wages paid to the employee, box 1 is that $18,000 I pointed out. Right here, the FTE counts. This is your FTE counts. Box 2 is that 4.1 that we identified. Right, and then right over here, box 3, this is any salary hourly wage reduction. But remember, we didn't have one, right? We didn't have one. We identified that as an FTE issue, not a salary hourly wage penalty. If we did notice any difference in gross wages, you would follow the instructions. There's a 5-step process in the instructions, and they basically have you figure out what was 75% of their first quarter wages. What was that difference between what you paid them and what they should have been paid? And then you start to multiply that as a penalty for each employee. Okay. All right. So that would be totaled as to box 3. Table 2, I didn't have any high wage earning individuals, so those stay blank. And at the bottom of page 4, we start to understand whether or not we meet that FTE safe harbor 2. Remember, that's what situation we were in, right? We had to reduce our headcount down to 2. Originally, it was 3.8. And step 4, by the end of that covered period, we got it to 4.1. Step 5 here is pretty clear. They say that if you end equal or higher than what you start, which is what we did, then we have met the definition for the safe harbor, and we get to enter a 1.0 on line 13 under the next step, which is called the Schedule A. So in our mind, line 13, 1.0 is what we're going to need. Okay. All right. So here we are, page 3. Here it is. Page 3 is where it starts to get easy. All right. This is where it just rolls. All right. Line 1 is your total from table 1, box 1, right? 111. It's the 18,000. Line 2 is the table from, is your box 2 total, right? That's our FTE, that 4.1. Line 3 is box 3. Now, earlier I told you that if you met the safe harbor for that salary hourly wage penalty, right? You brought it up in the nick of time, even if you can see that the gross wages were greater difference than that 75%, right? Here's your box right here. Just read through it. So as long as you bring it up in the nick of time, right, you can claim safe harbor and enter a 0 for the penalty. Okay, next, line 4 are going to be any totals from box 4 from table 2, which in this scenario, I didn't have any high wage earning individuals, so I didn't have anything in table 2 there. All right, so 0's there. And then as we come down, line 6 is what we call the non-cash compensation payroll costs. All right, so gross wages is what they're considering cash. Right, and non-cash compensation are the employer paid benefits. Employer contributions for health benefits, which by the way, they just expanded on the definition with that HR 133 Act, right? They made sure you understood that for employer paid benefits for health insurance, it included dental, vision, disability, as well as life. All right, those all can now be included. All right, and then line 7 is employer contributions for employee retirement plans. Line 8 is your state or local taxes. So for Texas, that's your TWC, right? That's your TX-SUI is what it typically shows up under. Right, so you'll put those totals. All right, I've been telling you that employers are not employees, right? They're owner employees, and they gave you a separate definition. And I told you earlier about that. And then I say, I'll show you what I'm talking about in a minute. Well, here you go. Line 9. You do not belong on table 1 or table 2. You don't put yourself there. Your wages don't belong on there. All right. You belong right here on line 9, and you have to make sure that you don't exceed those owner compensation caps, right? Those owner compensation caps are there for individuals with 5% or greater ownership. If you have less than 5% ownership, you're still going to see your wages here in line 9. You're just not going to be held to that same 2019 comparison, right? You're still held to that same $100,000 annual figure comparison. I know the details. All right, so here you go. Remember, this amount cannot be included in the worksheet table 1 or table 2. All right. Oh, we're almost done. Okay, line 10 is where you total all of these beautiful expenses, right? Everything that we've been working on. Line 10 totals them. This is your total payroll, okay? And then below that, we start diving back into those safe harbors for the FTE. They give us the definition and the option to file for that safe harbor FTE 1. It's right here, right? If you had to close down because of the HHS or the CDC, here's your box. This is where you would click that you met safe harbor 1, all right? Otherwise, you would try to meet safe harbor 2, which we did. We did that under the last page, page 4. And remember it said line 13, enter a 1.0. Bam, 1.0. We don't have to think too hard about it. Okay. All right. That was pretty good, right? We did it. We went back to page 1 and 2. All right. So let's take a look at page 1. We'll just sew it all together. Deja vu. We know where all this is. Check it out. We've got our employees, our FTE headcount we worked hard about. This person got the idle advance for $6,000. Good for them. They don't have to pay it back. Thank you. And then down here, they use the alternative covered period for the payroll, right? Because they're a bi-weekly payroll processor. They're able to scoot this over about 4 days. And that means all their payroll records handle everything 100%. They don't have to do any calculations for that. That's great. Right below that, we are just picking up those line items from the last page, page 3, Schedule A. So here under line 1, we're going to pick up that line 10. Remember, that's where we totaled everything. There's your line 10. Line 2 is any mortgage interest. Line 3, rent or lease payments. Line 4, utility payments. By the way, updates to the forgiveness application, they just came out. I don't have a copy here, but they have added the new expense categories. They just did that, all right? Below that, you've got adjustments for any type of FTE or salary hourly wage penalties, right? So here, this would be any salary hourly wage penalty, which would have started on box 3, page 4, and would have been pulled over to page 4, right? So we didn't have any in this case. Otherwise, we would have brought them over. Line 6 is you're going to take all of these amounts for these approved expenses, total them up, and subtract any penalties. All right. And line 7 is you would take whatever your lost FTE headcount is, right? That's your lost headcount. You would turn around and multiply that by your salary hourly wage penalties. It's a multiplier. In this case, we met safe harbor. So we don't see any reduction in our spending, and we're multiplying our FTE by our actual maximum amount, dollar amount for spending, right? We met all safe harbors. We came out in a good situation. All right, remember, we figure our potential forgiveness amount 3 different ways. The modified total of spending, right? The PPP loan amount, and then 60% of those approved payroll costs. All right, and at the very bottom, you're going to choose the smallest amount, and that's what you're going to request for forgiveness. And there you go. All right, not too bad, right? Like, you get the rhythm of it. Just documents is really important. Make sure that you're framing your conversation. Take some time with those before and afters and frame it. All right, so we're switching, right? All that forgiveness stuff, it's good for the first round of PPP, right? It's good for the second round of PPP, but let's talk about PPP second draw loan. That's what they're officially calling it. All right, so they've just created it. They're maxing it out at 2 million, right? So individuals might have qualified for more than 2 million and could with their documentation qualify for more than 2 million, but this second round is capped at that 2 million amount. All right, and so eligibility, you have to have 300 employees or less. All right, you would have had to, if you've had you would have had to have a first round of PPP, right? And you would have had to exhausted those funds or will have exhausted those funds, meaning spent them before the second round comes to you, right? You have to demonstrate a need. All right, so this gets really, really tricky. I'm going to spend a little time on this because I want to make sure people understand the documentation required. They're not talking about that in other presentation webinars, but when I read through the guidelines, it's pretty evident to me. All right, so you're going to have to look at your financials for 2019. Look at the end of year numbers. Go ahead and do an end of year 2019 profit and loss statement or income statement. Okay. And then you're going to do an end of 2020 profit and loss or income statement. You can look at those numbers, and if your gross revenue, the most amount of money you make, now remember, you get to subtract out any CARES Act money or any emergency relief funds. Those were not earnings or gross revenue to you. You will not be taxed on it, right? You don't have to use it to qualify for this loan. So when you compare your annual amounts, if you can see a reduction in excess of 25% in 2020 from 2019, right? Good job. All right. Good job. They are requesting that you have your 2019 tax filing and your 2020 tax filing. There's the jarring news, right? They wanted to see the tax preparation, the tax forms. They don't necessarily have to be officially filed yet. And I don't hear anybody talking about that, but that's what I'm reading from the SBA records. So get your stuff together. The gate opens for this loan tomorrow. All right. All right. So get that together. Now, let's say you don't quite see a 25% gross revenue difference. All right. They're allowing you to split up the quarters. All right. So that's the next thing you look for. All right. So you can look at your quarters for 2019. So separate the quarters out. It should balance back to the end of the year 2019. And then you're going to separate the quarters for 2020. All right. And it should balance back to the end of year 2020. So you need all this information. All right. And then you're going to compare those quarters. And so let's say second quarter for you was a problem. You can show a reduction in gross revenue in your second quarter that far exceeds that 25%. You would provide that level of detail to the PPP lender for them to show that you merit the program. So you can do it on an annual comparison, you can do it on a quarterly comparison, but it needs to be lined up. Now, they do in their guidance provide like a little snippet that says maybe people started in the middle of 2019, maybe your business was formed in the middle of 2019, and you don't have the full quarter, right? You have to look at what you do have and compare it to the comparable time frame, right? They'll let you go back in a comparable time frame. Okay, so you've got that. Now, this is the other uncomfortable thing that I have to share with you. All right, so they're looking for 941s. All right, so if you don't typically file 941s, do not panic. You don't have to rush out and do it, but they are looking for payroll records for the 941s to show the dollar amount that you can be eligible to borrow. Okay, so I'll get to that in just a minute. Just remember, eligible entities are the same type of eligible entity requirements for the first round of PPP, except they've made it really clear they don't want any big businesses in this, all right? No big businesses, so you cannot be a publicly traded company, and if you are a venue, okay, maybe you sell tickets, maybe you are a wedding venue, right? You are a venue, live events where people gather. All right, and you are looking at that grant from the shuttered venue operator. And by the way, new information just came out. SBA is promoting the education starting Thursday. All right, so I'll try to incorporate that into the upcoming webinars as well if you can't quite make SBA's, opening comments on it. But if you're going to take that shuttered venue grant, you cannot apply for this PPP second round. Okay. It's one or the other. Good news is they're offering the same type of benefit. You're just not having to take out a loan. They're just giving you the money. Okay. Bad news is I'm really concerned about set asides and how that's going to play out and how quickly that money is going to last. So I really encourage business owners to get your paperwork together and kind of rush to try to get any type of support if that's really critical for you. The first time we did this PPP round, remember, funding round out in like 2 weeks, right? And now we've made people wait a really long time for additional support. And trust me, I know your SPDC advisors are there with me. The need is huge. All right, so likely the amounts that they're offering, which are smaller than what was originally offered, are going to be gone quickly. So you want to make sure you're getting your stuff together. Okay, so I kind of went in and told you your 941s are really important, right? Okay, that's because they're giving you an update on how you look at how much you qualify for. That's different, okay? Now, if you're like a normal business and you're not this accommodation and food services, which your NAICS code would begin with a 72, if you're just a normal business, not in that group, then you can use the same data you provided for your first PPP loan for the second loan. You don't necessarily have to come up with new data, right? But they've given this little option for businesses that maybe have had more payroll expenses during 2020, right? They're allowing for you to reset the stage. So you can use payroll records for the last 12 months, right, in order to justify potentially a higher number that you would qualify for under this PPP second round. So it's either your 2019 payroll records, or it's the last 12 months of payroll records, really pointing right now at your 2020 payroll records. But, big but, if you typically file 941s, they want to see those quarterly filings to help justify your payroll records. All right, and so if there are a lot of people that are not quite there in 2020, maybe they haven't quite prepared their last 941, go ahead and start preparing it. It doesn't necessarily have to be filed, but prepared and provide that level of data. All right, and that's what they're asking for. Now, if you are one of those businesses that are in that protected NAICS code 72, the accommodation and food services, you actually get to apply for more support, 3.5 months worth of average payroll costs. Everybody else, it's the original 2.5 times the average monthly payroll costs. Okay. All right, so seasonal employers, I'll just add a little note. They didn't really have a good definition for you the first time, right? They ended up kind of cutting off your season potentially. And so to fix that, they came back and said, now your calculations get to be a full year. You can go back from February 15th of 2019 all the way through February 15th of 2020, right? So a little change up there. Businesses that maybe have multiple locations, right? You can file as long as you don't employ more than 300 employees for each physical location. So I gave a little definition under there. You still have to file the same type of affiliation rules. You still have to be an eligible entity based off of the original, qualifications with those two accommodations, no publicly filed entities, and those venues, right? You can't file for the second PPP if you're a venue. And they've reduced the document requirements for borrowers that are looking for that under $150,000 amount. Okay, so I want to make sure that I'm clear on this. They're reducing the documents so you don't have to prove that, right? But you still need to have that type of previous information in with the lender to make sure that they understand where you started. So most of these individuals will be going back to their original PPP lender where they got the first draw that already have that level of documentation for them to get the second draw. If you're going to a brand new PPP lender, which you can, right? Nobody says you have to go to the same PPP lender for the second draw, but if you are going to a new PPP lender, they most likely will need some level of documentation to justify your eligibility for that dollar amount of the loan. But they are saying that if you already have it on file and you're not using anything new from 2020, then you can certainly go back and do a lower document burden. Just kind of go back and use the same documents, and they will justify your eligibility for the loan through the forgiveness process. So that forgiveness form where you have to document everything, you'll be doing more documentation there. Okay. All right, not too bad, right? There is more support for farmers, housing cooperatives, and what we call news organizations, particularly news organizations handling the disaster relief, right? As well as any destination marketing organizations. Here in Houston, we have an organization called Houston First. They were the ones that brought the NFL Super Bowl to Houston, right? They make sure that you're being seen. I'm sure you guys out there in North Texas have similar organizations. Those organizations, those 501c3s, are now being allowed to enter into this round, okay? So fantastic. For farmers, they're being a little bit more detailed on your Schedule F. If you have questions about that, you can certainly reach out to your business advisors. And if they need help, I'm more than happy to help with that. But we can make sure that you understand exactly how much you'll be eligible to borrow. They've also opened up the PPP support to farm lenders, farm credit, right? People who are really experienced with farm lending and can be much better at helping the industry. It was a good move. And then housing cooperatives, which were kind of iced out of the support, they're now able to come in and get the support as well, as long as, again, they still had employees. Okay. So this is what the second draw at loan application looks like. So we're going to just zoom in. This is hot off the press. They just came out with this within the last few days. All right. And it looks very similar, or at least it's the same information as to what you've seen already, right? You're identifying the entity, the name of the entity, the contact details, the operations. You're identifying the average monthly payroll. Just remember, they're giving you some options here depending on your NAICS code designation. You're identifying the number of employees. Remember FTE, we're still going with FTE, it's slightly different. And then you're going to tell them how you're going to use it. Notice we've got the new categories here. They added that for you. And then they give you that comparison between those quarters, as well as the comparison within the gross receipts for that annual period, right? That's how they're helping to identify that you do in fact qualify based off the disaster assistance need for this PPP second draw. Right below that, it's the ownership that has to be defined, and you have to go really carefully, please go carefully through these questions, because these are those self-certifications. This is where you hang yourself if you're not careful. You have to make sure you understand this and that you meet these requirements. Otherwise, if you take the money and you go through audit and they claim that you couldn't prove this, then you get yourself in big, big trouble. And all of those eligibility requirements that we just talked about, they're all in here, right? You have to make sure that, again, you were in operations by February 15th of 2020, that you didn't permanently close, right? And that you realize that deduction, 25% or greater. These are those self-certifications that are important for the eligibility. But all in all, it's a fairly simple process, fairly simple form to get by. Okay, and that's the last half of your certifications. All right, so borrowers for the second PPP draw will be eligible for the forgiveness. We talked all about that. You're going to be following the same rules. Nothing's changing there. All right, they're extending the safe harbors for the FTE and the salary hourly wage penalty. All of that is made known. So we're finally at the end of the presentation, and I really appreciate you guys hanging in, because again, it is fast and furious, right? So important details to remember. New guidance continues to roll out every day. I am waking up to new guidance. And remember, we're going to see this kind of change until probably the end of February when SBA, which is the administrator, finishes nailing everything out. They've got a lot on their plate to figure out logistics-wise. Lenders are beginning to extend the PPP draws tomorrow, okay? These PPP second draws, they could not start before. Monday, what they did do was allow any businesses that had not received their first PPP loan, they were allowed to apply Monday and today. Starting tomorrow, it's going to be businesses that are in need for the PPP second draw, and there is some set aside. I like to talk a little bit about that. So minority businesses, veteran-owned businesses, women businesses, trying to think of any other protected classes, businesses that are in hub zones or low income areas, right? Those are set asides. They've put aside some money to try to protect and help those people. Those funds are made available to what we call CDFIs. That stands for Community Development Financial Institutions, right? LIFT Fund, People's Fund. Those are CDFIs in our area. Right? They've also made them available to CDCs, community development companies, right? As well as local community lenders. Now, if you want to know who to go to get a loan, knowing that these funds for these set-asides are there, you need to reach out to SBA. Okay, so SBA.gov, they have what we call a lender link. All right. It's like a matchmaking online dating app. No, it's kind of like that. You go in there and put information about your business, your size, your need, right? And SBA is going to immediately send your contact details to those community lenders that would be able to support you, and you will get their contact details, right? So that's probably one of the easiest ways to find a new lender if you're looking for those set-asides. Now, the set-asides are going to be available till the end of the week, right? Not a lot of time. So that's why I'm trying to encourage our business owners that really need the funds, get your paperwork in order. Remember, you need your documents. All right, so there are penalties for not adhering to the guidance, and that is real. So make sure you're being cautious and you're going through that. Remember your safe harbors. They provide that support and flexibility. You must be conscious of your spending, even more so as they've opened up the bucket and they've allowed for multiple uses. Okay, and anticipate SBA will audit you. If you read through what these PPP lenders are having to do for every single loan, you would weep with me. Okay. And so the audit is real. I got my first call just Monday from one of our business owners locally who told me that SBA had picked up their PPP loan to audit it. Right. And this was beyond the PPP lenders audit. So SBA is starting to pick up those files. And by the way, the amount was under $50,000 and they were being audited. Right, so that gives you some live experience. So in summary, support for small businesses during this time is super evident, right? Updated guidance from the SBA and their support is going to help more small businesses. Right? Understanding whatever support is available is the responsibility of the business owner. As much as we would like to put it on the politicians, it really starts with us. We have to ask the questions. And your SBDC advisors, they're there to support you with free assistance. And if you're interested in learning more, reach out to them. Okay, gang, we did it. My name's Rebecca Schultz. I'm the founder and executive loan consultant for Centerlock. I really appreciate you taking your afternoon, early evening to spend time with me. If you have questions about the presentation, you're more than welcome to reach out to me. But remember, your SBDC advisors, they're there, right? They're there every day, rain, sun, and shine, storms, winter, blizzards, they're there to support you. And I'm going to hang on, and I know there's a lot of messages in the chat, and I want to make sure that I answer those. So I'm going to stop sharing now.
Oh, Rebecca, you were right when you said fire hose. There's a lot going on. We do have quite a few questions. I'll start it off with my question. Are owner draws eligible for PPP? I think you talked about this some.
Yeah, I think we talked about it previously. So owner draws are not necessarily included in this PPP forgiveness. So they are looking strictly at those 941s, right? Or your tax documents for the Schedule C. I did not see any additional guidance for the owner draw situation.
Okay, okay. Daniela is asking, what is the exact definition of alternative payroll covered period? We are a restaurant, received our PPP in May, but only ran our first payroll in July because we were closed due to government restrictions. Our lender says the alternative payroll period has a 14-day limitation from the disbursement date. However, I wasn't able to find this information on the treasury.gov or SBA.gov site. Do you have more details on what exactly the alternative payroll period refers to?
I sure do. That's a good one. Okay, so alternative covered payroll period or covered period defines is only used by employers that have weekly, every 7 days, or bi-weekly. And in my last example, all right, I showed where the business had paid biweekly, and they went from a covered period where the actual disbursement was made on May 4th, and their next payroll was on May 8th. That alternative covered period is only meant to go to that next payroll cycle within that 14-day span. And so for you, you would not be able to use that alternative covered period to span a difference between May to July, right? That wouldn't be usable. For you, what you would be looking at would most likely, you would just pick up on that payroll period starting July, right? And if you were a biweekly payroll processor, I guess you could define it as the alternative covered payroll period, but you would be electing for that 24-week covered period, and you would just be picking up from that time frame, right? But any spending during that covered period is for all non-payroll expenses. So let's say you had rent, or let's say going back in time you had PPE, right? You had to get things ready for your staff and team. That's going to start the date, that covered period, the date that you receive those funds, and go through that full 168-day or 24-week covered period. And let me know if you have any more questions about that, and we might be able to take that offline if that was still confusing for you. But your payroll would pick up when your next payroll period was, but the alternative covered payroll is really just defined by whether or not you're biweekly or weekly.
Okay, Michelle has a couple of questions, and I'm going to put them together because I think they are basically the same question. What if the business opened in 2020? And is all the new money only available to people who got the PPP loans before? What about a business that opened in the fall of 2020 and is having ramp up issues?
Yeah, so unfortunately, they're really clear that you have to have been in business by February 15th of 2020 in order to be eligible for the PPP funds. Okay. Now, outside of, and I would say that would go into the EIDL funds as well. It's disaster assistance. But under the new guidance for the SBA program, really pointing to the 7A program, which would be the SBA Express program, the 7A program. Those loans are out there, and they don't necessarily have that same disaster connotation. That's for growth. Those are people going into business right now. You would most likely be looking towards those programs. And what the HR 133 Act did for you is that it made it easier. It increased the guarantee to the lenders to make them more active in that market, right? So hopefully you'll find a lender because now the risk is offset for them. It eliminated any guarantee fees, so now you don't pay guarantee fees. That saves you 3.5% of that loan amount roughly. All right. And then in addition to that, it loosened up the express guidance, which allows from 350,000 to $1 million in initial funding really quick through those lenders. So look for the upcoming presentation we'll be giving, which will go over more of those details under the SBA program, because that's what you'll want to tune into. The PPP is for people that were already in business prior to the disaster.
Okay, I hope that helps, Michelle. Richard wants to confirm EIDL was through SBA directly, no banking partners, correct?
Yes, correct. And so that EIDL advance that I talked about, right, that's coming back out, it's going to be back through SBA Direct as well. And I'm waiting to find out how people can go back and get more money out of the EIDL grant, but they haven't laid that that path or that information for us just yet.
Yeah, because that application was available online with SBA directly.
Correct. You're exactly right. You're exactly right.
Okay, wonderful. Okay, you were talking about during safe harbor discussion, written refusal of an employee to return to work. What if they refuse to return to work, but they won't put anything in writing, which is kind of not unusual? Would proof that an employer actually sent a letter to the employee to return to work and use like certified mail and got a return receipt, would that be documentation as well that the employee has refused to return to work?
Yeah, I've seen that's a really good idea. Yes, you definitely want to document that you sent it and that they had received it. On the flip side, I've seen business owners capture their texts. You know, they text the employee, I need that letter back from you with a written response, and they've gotten a response back, no, I won't send it. Right? Well, guess what? That's a written response that you asked for it and they refused, right? I've had people
Exactly.
do transcripts of voice messages that were left for them. People are getting creative. So whatever you can do just to show that you tried, right? That's what I would do. It's so much harder to try to go back in time, 3 years later to try to gather that detail, but you just want to try to collect it now.
Mm-hmm. Okay. Curtis is asking, will the transportation need to be in the name of the business?
Transportation be in the name of the business.
Yeah.
Okay, so they talk a lot about anchoring those expenses to either your 2019 or 2020 tax filing. Okay, so the way I would answer that question is if that is an expense that you had used in your 2019 tax filing, that transportation expense, right? And you can kind of document that, then yeah, I think you can anchor that. And if that was an expense that was under you personally, right? If that bill was under you personally, but you had already historically filed that is a business expense, that's okay, right? If it's maybe an expense that's new, right, but it's legit, all right, make sure that you're filing that in your business 2020 tax return, right? You just want to bookend it. And then even if it's in your personal name, if you're defining it for the business and you have a good claim for the business, that's between you and an accountant. You just need to document that it was included in your taxes.
Okay. And Curtis has another question. Man, Curtis, these are hard questions. Okay. What if the business was established in 2018, that EIDL, really started conducting business in 2019, but did not file and needs to go back to amend their 2019 tax return?
Okay, so I'm getting that a lot from people. You're not the only one. I'm hearing that over and over. I've had people tell me that they needed to amend the 2018 and 19 tax return, and they're still trying to get funding. So I will say that they need some legitimate IRS records from 2019 or 2020. Okay, so however you shake that up and make that happen, you're going to want to be able to provide that to get any of the support from either the EIDL program or from the PPP program. You need something filed. So go back, try to get your 2019 filed quickly, right? And possibly the 2020. 2020 is probably going to be a better year for you because you'll have the full 12 months. Even if it's not good, it'll probably look a little bit better than a partial 2019 is my guess. But remember, for the PPP second draw, you get your choice. You can use the end of year 2019, as long as that's been filed, and then your 2020. Remember, it needs to be at least prepared on those tax filings.
Okay. And Stacy has a question that I really had the same question. So am I clear that nonprofits, 501c3s can apply for PPP round 2 if they are small and led by a woman or a minority?
Okay, so you're diving into some others. Okay, so they are allowing for 501c3s, but they're still a very kind of restricted view, right? Knowing that you're minority and that you're woman owned, that does put you in that special bucket that we talked about, those set aside funds, but they still have more questions for the 501c3 nonprofits. One, you have to make sure that you have 300 or less employees, which I'm sure you can say that's okay, right? And there's one other requirement, but what I will share with you is that you can go to SBA and they actually have actually you can go to the U.S. Treasury and they actually have a handout on that real quick. And here we go. I'm just going to share it real quick with you and you can check it out. I really feel like it's important that you see what I see, right? So here you go. Here's the Paycheck Protection Program guidance for the minority and underserved. They go over everything that we just talked about and then with more detail. Okay, so if you are in those hub zones, anything like that, and you're looking for more guidance, this tells you about the set-asides, and it gives you a little bit more details. We talked about the CDFIs being important. Here you go. If you want additional government assistance for it. Unfortunately, it doesn't dive into the, the 501c designations in more detail. In most cases, small nonprofits, 501c3s are eligible, but there are some little hiccups in that. So you want to make sure, just check it out on those facts and answers that are out there on the U.S. Treasury website. It's U.S. Treasury.
Okay. So just kind of piggybacking on that, what about the 501c6s, like the historical chambers of commerce?
Yeah, they were allowed in. They were allowed in on this funding. Those businesses that weren't able to get the PPP loans originally, which they would be included in that category, were able to start getting them as of yesterday. Remember, okay. The portal to receive and get granted those approvals through SBA was dedicated to those businesses that hadn't received the original PPP funds, including those 501c 6s, today and yesterday.
Okay, well, that's good to know. And Michael is giving some clarification. The idle advance has to be located in a low-income area. Will that include more rural areas such as Bowie and Montague County?
Okay, so that's a really good question, and I've heard that multiple times. And the difficult answer is SBA hasn't come out with any official guidance on that. And I imagine that the guidance for that will match the instructions for applying. And they were given through that HR 133 Act 45 days from the initial act being accepted or signed into law in order to come up with that guidance. So I think we'll see the final answer right in the middle of February. But what a lot of people are hinting at is that they most likely are going to follow those hub zones. So if you can go into the government hub zone maps and you can see maybe there's low income in that particular rural area, which there probably is, then that's probably a good indication that you're on the right track, that you would be eligible. But again, no official ruling from SBA has been made available.
Okay, that's wonderful. It looks like we've covered everything. Is there anything else you want to cover before we wrap up?
Nope. Again, let's do this again with the 7A loans and the 504. And guess what? They're coming up with a brand new product called the 504 Express. I almost can't wait, right? This is great. But they're doing some crazy cool things with that. They're allowing business owners that maybe already have 504s to restructure within the programs. And they're allowing them to refinance. And so going forward, what I would like in the next presentation would be to help you guys understand the magnitude of that flexibility and give you some examples of how that can be used to support businesses right now, right? We as lenders, we put on that hat all the time because we're in those conversations trying to figure out creative ways to do it. It is not as easy as business owners who don't think like that to do it. But really, you guys have to be your own advocates at this time with all the lenders being so busy and the demand being so huge that I feel like having some quality information of that level will support the business advisors that are helping you, right? And it'll help you come up with some creative ideas on your own on how to maybe better utilize the programs coming out. So that will be coming up.
Wonderful, wonderful. Just wanted to thank Rebecca for all of this information. It's fantastic as usual. Following the webinar, probably tomorrow, you'll all receive a survey in your email, and please take a moment to complete and return the survey. Information we receive from you through these surveys used as feedback ways we can improve our program and how we can improve the classes that we offer and how we can better serve you as a whole. And it also helps to satisfy our reporting requirements for our grants. As an added bonus, once we receive your survey, we'll send you the slides from today's presentation. In addition, we have additional training events already booked. These are just a few. We have on the 27th, we have Eric Spelman coming back, harnessing internet video to generate sales and leads. We're going to learn how to make internet videos. And then Chris Tripley is going to continue his series on restaurant reality with Future of Service. Rebecca will be back to give us more information on PPP. Then we have Tisha Dodge coming back to talk about legal contracts and agreement fundamentals. It'll keep you out of the courtroom. And then we have the third session in Chris Tripoli's Restaurant Reality Series, Menu Best Practices. We have more scheduled. You can go ahead and visit our website at sbdc.nctc.edu to register for these events and for future events. You can still find contact information, schedule an appointment with a business advisor, and find many useful resources for small business owners. Again, these benefits are available to you at no cost. We would like to thank our partners at the Small Business Administration, the state of Texas, North Texas SBDC Regional Office, and our host, North Central Texas College, that provides funding for the SBDC program. Thank you again for joining us today, and we look forward to seeing you next time. And this will end the webinar. Thank you all. Have a wonderful evening.
Thank you. Bye, everyone.